Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to be notified each time one comes out. This is my thoughts on market happenings for the week ending December 10, 2021. The indexes for the week were all positive in Canada and the US, including oil, as the Omicron variant information trickled in and the COVID variant was seen as less deadly than initially expected. Pfizer kicked off the day announcing that 3 doses of its vaccine are effective at neutralizing the Omicron variant, citing its own preliminary lab tests. The pharmaceutical company also noted that 2 doses could still protect against severe disease. Market experts are more worried about the central banks raising interest rates too quickly to fight inflation and putting the economy in a recession than about the Omicron variant. In fact, the S&P 500 and Nasdaq had their best week since February and the Dow since March. This past weekend brought some relief for supply chain bottlenecks in British Columbia. The Trans Mountain Pipeline announced its pipeline resumed service almost 3 weeks to the day since the flow of oil was shut down as a result of extreme weather in British Columbia. And Canadian National Railway said that trains are moving again between Vancouver and Kamloops in the interior of British Columbia. In Bitcoin news, after falling as much as 21% on Saturday, December the 4th, the best known cryptocurrency has stabilized, which is a relative term considering it was down 28% from its recent November high. Two major developments are on my radar this week in China. The People's Bank of China cut the reserve ratio requirements for the country's banks in a move the central bank said will free up 1.2 trillion yuan, which is roughly 240 billion US, in lending capacity. Meanwhile, shares in China's Evergrande fell as much as 20% overnight to Monday, December the 6th, as the debt-laden property developer moves towards restructuring. On Wednesday, Bank of Canada held its interest rates as is, to no one's surprise. The bank is expected to start raising interest rates in 2022, perhaps early in 2022, such as April. Inflation has been over target the last 7 months in Canada, so some experts predict 3 raises in 2022 and up to 7 by the end of 2023. It's going to be slow and gradual, but it will have an impact in the market and in real estate. This week also was reported the US initial jobless claims fell to a 52-year low at 184,000. I got a little bit of information about some of the Chinese ADR stocks that have been on the bubble as far as delisting. And one of the stocks that is going to be delisted is Didi. And so the Chinese stock delisting information is just to let you know what happens to your shares when a company delists. So there's 3 possibilities. So if a US listed Chinese company like Didi delists, there are essentially 3 possible outcomes for investors. 1, a share buyback, 2, a share transfer, or 3, share limbo. So number 1, in a buyback scenario, the Chinese company could purchase its shares back from investors at a price agreed upon by shareholders, effectively going private. If the company wishes to go public again, it would have to do so in a separate listing in the likes of Hong Kong. Number 2, in a share transfer scenario, investors would swap their ADR for the Chinese company's foreign stock. In the case of Didi, which doesn't have a secondary listing, they would have to first launch a listing in Hong Kong or Shanghai, for instance, to establish both a home for its foreign stock and a mechanism for the transfer of ADRs. Now, do note that companies like Baidu, Alibaba, and Tencent do have shares on the Hong Kong Stock Exchange currently. So if number two was to happen for them, it would be an easy transfer over to the Hong Kong shares. And finally, number three, if Didi doesn't buy back shares, but rather delists and doesn't launch another listing, the ability to trade its shares would be in limbo. Investors would still own equity in the company, but they'd be unable to trade their stock on regulated exchanges. They could sell their shares in over-the-counter markets with limited liquidity, or hold on to them until a suitable listing was launched. And to close with the big story of the week, the US inflation rate rose 6.8% year over year in November, the highest increase since 1982. This number was largely expected. So, this is what is causing the expectations of US bond buying tapering and interest rate increases, perhaps late 2022. Canada seems to be on an earlier schedule than the US, having stopped its tapering already. Next week, Fed officials are expected to react to the burst in inflation this week by announcing next week that they'll accelerate pulling back on the bond purchases, as I've mentioned, and that in turn could pave the way for interest rate hikes as soon as spring of 2022. Nobody is quite sure. Also, next week, Rivian reports on Thursday, December 16th. And Canada reports its consumer price index on December the 15th, the Wednesday. So that concludes what has happened this past week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.